Romaine Bostic here alongside Scarlett Fu. Jess Menton joining us right now, helps to lead our cross-asset coverage here at Bloomberg with a closer look at some of the big gainers and decliners here on the day. Jess, where do you want to start? You want to start with the good or the bad?
I'm going to start with the good.
Okay.
I'm going to point out what happened with Microsoft, because this obviously is another big tech growth name, the second biggest weighting in the S&P 500, just shy of Apple's weighting when it is over more than 7%. But when you see a stock like that, that's ticker symbol MSFT, up about 3%, so it's best day since July 18th.
Yeah.
If that stock hadn't held up, this pressure in this, especially the decline today, would have been far worse. So you are seeing that stock obviously on the back of what we did see with those better than expected results, which was a different story, right, than what we heard when it came to Alphabet yesterday after the closing bell.
Absolutely. Here, what else you got?
So I have to also point out one of the biggest gainers in the S&P 500, WM. So
I saw this. So
yes,
that's waste management, right?
Waste management. This
Which
stock.
Correct me if I'm wrong, but that's a trash company, right?
It is.
Okay,
it is.
all right.
It's Houston-based.
Okay.
Sanitation.
I just wanted to double check.
Sanitation,
Yes.
Houston-based company.
I wasn't sure if that was some
Technical term.
ironic name or something.
It's also an earnings story here. So those results did beat estimates, but then also the company did raise its guidance. A lot of that was driven because of free cash flow. So if you look at that stock, up 6% today.
Was that the biggest gainer in the S&P?
It was, yes, it was indeed. So best day since March of 2020 on that. So yes, especially when you are looking at a name like that, that's why I ended up pointing it out, because it was.
And I'm glad you pointed it out too, Scarlett. Just I won't quiz you on this. The number one performer in the S&P was Waste Management. Second was Travelers. And third was Westinghouse Air Brake, which I'm not even sure what that is. And General Dynamics. And you got to go pretty far down the list before you even get to Microsoft.
Yeah, right. And Microsoft had a 3% gain at that.
Yeah, and it was only
it's just the weighting, obviously, much larger when it comes to Microsoft. Over
Waste
7%.
Management isn't moving the market.
No, definitely not. But top gainer in the S&P 500. And then, of course, Gap. So looking at retailers, this stock up 5%, best day since October 16th.
Yeah.
So you are seeing. Actually, Wells Fargo did upgrade Gap to overweight from equal weight. So this has definitely been one of those inventory type stories that had been so many issues there, but they are more optimistic. They did raise the price target on that stock to $16 from $11. If you look at where it closed today, a little over $13. So that's something as far as just improving some of the cost cuts.
Well, it's a clean slate for the new CEO, I guess is one way to look at it.
Yeah, who came, and we just point out he came from Mattel, which is like, you know, he has a halo around his head right now.
Mattel also reporting after the bell today, so we have to keep an eye on.
How about that for synergy? All right, let's go through some of the decliners on the day before we are awaiting earnings still.
Well, we have to point out Alphabet.
Yeah.
Because for obvious reasons, but we are looking at that stock dropping, and obviously when you see something like this, and one of the biggest weightings in the S&P 500, down 9.5%, worst day since March of 2020. So we do know that it's cloud unit. That's where we're disappointed. Smaller than expected profit. We clearly know how, especially when it comes to its search engine, that's sort of the main dynamic there. But as far as what it means for the future, a lot of that hinging on the AI story that I know, Scarlett, you talk so much about. And we know this is sort of the fervor there. So different story there when you're looking at Alphabet compared to Microsoft.
Also, Alphabet did pretty well since its last earnings report. So the bar was a lot higher for that company compared to, say, Microsoft.
It is. And that stock, just to point out, is up more than 40% year to date when you are looking at Alphabet. Another story on the chip space.
Before you move on to the next decliner, I do just want to point out we are getting some kind of secondary earnings crossing the wire already. And I do just want to point out one of the biggest decliners in after-hours trading is Align. Of course, that's the maker of those plastic braces, right? Yeah. Down 15% here on the back of their earnings coming out. It looks like a minor miss on net revenue and a minor miss on adjusted EPS as well. Sorry, back to you, Jess.
Looking at chip makers, so Texas Instruments, ticker symbol TXN, that stock down close to about 3.5% today, so it's the worst day since July 26. But if you look at the SOX, the semiconductor index for basically that, if you look year to date, close to 30%, had been up a lot more, but just to put in perspective, last year the stocks actually lost a little over 35%, so that was its worst annual decline since 2008. So you've seen that come back, but again today, when you're looking at chip makers broadly, not even just the big tech stocks, if we're thinking about what's happening with Alphabet, as well as Apple and some of these other names today, or Amazon, also the chip makers coming under pressure there. Yeah. So that one is a big one. And then I wanted to point out.
So just time we stop you once again. We're a breaking news show here, Jess. We got a lot going on. I mean, you were just extolling the virtues of Dickinson over there, taking over at coming from Mattel and going over to Gap here. We're learning the Mattel earnings crossing the wire.
Yeah, Mattel knocking it out of the park here in terms of the EPS number for third quarter. Adjusted EPS of $1.08. Analysts were looking for 86 cents on average. Net sales for the period, $1.92 billion. Analysts were expecting about $1.84 billion. Gross margin, adjusted gross margin of 51%. That is higher than what was anticipated as well. And in terms of the outlook, it sees full year adjusted EPS of $1.15 to $1.25. Now, the consensus estimate is $1.20, so maybe, I mean, that matches the estimate, right? The midpoint of that range is the consensus estimate, but it leaves itself room to perhaps move it up even more next quarter.
I am curious when we're going to start to see more of a material boost from all the Barbie hype, right? I mean, the idea was that this was kind of the pillar for what's going to be a lot of IP that they're going to press out.
Next.
And you're smiling. Did you see Barbie?
I did.
Okay, well, guess what? I think they're doing Barney. They're doing the Matchbox cars or whatever they make.
And then, of course, they had this licensing deal with Disney, so that was the big factor. And especially because Citi's thinking that this will benefit, obviously, Mattel more than its rival Hasbro, because Mattel had in the past lost out on that licensing agreement, but now it has it back with Disney. So that's a crucial factor there when we're talking about, obviously, the Barbie movie, but then also what it means potentially for the consumer, and then some of the inventory headwinds they had last year during the holiday season, what that outlook is for this year.
Okay, I do want to go to some other earnings. And actually, now that you mentioned the consumer, so sit tight here, Jess. This is Whirlpool, Scarlett.
Exciting.
Yeah, I mean, the shares are down to 2% here, but I think it's interesting, too, when they talk about their forecast here. I mean, they're basically guiding for revenue on a full-year basis to about $19.4 billion. That's pretty much in line with estimates here. But when we talk about sort of the margins and the pricing power here, I think that's where some of the concern is right now. They're basically saying that their ongoing EPS is still going to be above estimates at $5.45 versus $4.25 here. But a lot of that has to do, I believe, with the tax benefit.
So it's interesting with Whirlpool, because when do you actually buy these big new appliances? When you buy a house. There's no house sales transactions taking place right now. Everything's frozen, with no one wanting to give up their sub 3% mortgages, and of course, interest rates really high as well. We just heard from IBM as well, so the big IT company, which will give us a read on enterprise spending. Third quarter revenue, $14.75 billion, better than expected. Analysts were looking for $14.68 billion. In terms of operating EPS, $2.20. Also higher than the average analyst estimate of $2.12. Software revenue was $6.27 billion, pretty much in line with estimates. And consulting revenue missing the mark. And this was going to be the weak link here. Anurag Rana of Bloomberg Intelligence had given a heads up that that was something he was focused on. $4.96 billion. Analysts were looking for north of $5 billion.
Interesting, though, the knee-jerk market reaction is to the upside here by about 2.4%. And I think you were asking, I forgot the guess you were asking, but you were talking about this a little bit earlier about IT spending and business spending, and whether that is actually as healthy as I think some of these companies want us to believe.
Right, because there's a lot of signs given that we've seen, and Accenture had given this indication as well, that IT spending is slowing down quite a bit, along with Oracle and IBM, of course, another read on that. That's enterprise spending, right? But then on the other hand, you have consumer spending, which people were expecting to see slow down, but so far hasn't really played out just yet.
Jess, and I'm curious, I get your thoughts too. I mean, I know you haven't had time to parse the numbers, but when we talk about this balance between business spending and consumer spending and support for the economy, I mean, have investors sort of bought into this idea that both of those pillars of our economy may actually be softening just a bit?
Well, if you look at the latest update to the Atlanta Fed's GDP numbers for the third quarter, it actually stayed the same, but it was about 5.4%. Tomorrow, we actually get the reading on third quarter GDP numbers. It's supposed to be above 4%, and obviously really driven still by consumer spending, but then also exports are supposed to be a big component of those third quarter numbers. They're wondering what that would mean potentially for the fourth quarter, but from a seasonality perspective, that is typically historically the gangbuster consumer spending quarter due to the holidays.
And I'm glad you brought up that GDP number here, because when you say 4%, I mean, that's the economist estimates, obviously.
Yes.
I don't think anyone a couple of quarters ago would have predicted that.
Everyone's thinking
everyone was saying we were going to have a negative sign or at least a flat line in the second half. And here we are, third quarter, looking at 4%, assuming that actually is what the number is.
And you could take a look in the ECFC function in the terminal. So coming into this year, there was an expectation on a quarter-over-quarter basis that it would contract in the second and the third quarter. As we moved through the year, it continued to be pushed out, and now you don't even see that anymore on a quarterly basis.
This is like advanced terminal training here from Just Menton. ECFC,
I watch it very carefully.
Economic forecast, that's the function on the Bloomberg terminal.
Well, let's keep it going now because, of course, we were just talking about IBM and, of course, the business spend there. We're now getting ServiceNow earnings crossing the wire here. Adjusted EPS coming in at $2.92. That's a beat over street estimates of $2.56 here. And the company saying that the EPS, adjusted revenue at $2.24 billion. That's just about in line with what the street was looking for. Here's your forecast going forward. Full year subscription revenue, $8.64 billion. The street was looking for 8.6, so relatively on the nose here. Those shares, Scarlett, higher by about 4% here in after hours.
Okay, trading. So it's for now, the software companies are getting a bit of a beat, and IT services companies, whether it's ServiceNow, whether it's IBM, it really points the spotlight at something like Alphabet, with the cloud business not doing as well as analysts had expected.
This is killing me, Jess. We're all waiting here for Meta platforms. I feel like we're all talking around it because they're supposed to be the star of the show. It's like Beyonce when you're just sitting there. And you're like, when is she coming out? And then finally,
no, it's like Madonna because she doesn't show up until 9:30 p.m.
I know you're a star, but just come on. In all seriousness, though, we get to this idea of whether we're going to see a broadening out. When we have up moves, I should say, a broadening out of any of these rallies, or people are just going to gravitate back to what they feel is safety in terms of some of the big balance sheet names like a Microsoft here. Are we going to get enough out of these earnings this quarter that's going to give people a little bit more confidence to say there's more to life than just, Alphabet, Amazon, Microsoft, et cetera?
Well, when you look at the top 5 companies in the S&P 500, which are these mega cap tech company names that we typically talk about, on a year-over-year basis, they're actually supposed to post EPS growth of around 30%, so much higher than if you look at that preseason estimate for the S&P 500 down, contracting about 1%. But that does begin to level off next year, but a lot of that is just because the base effects and year-over-year is not quite the same. But because of the cost-cutting efforts, like say Meta, for instance, last November was when they first began that first tranche of big job cuts. We saw it again in the spring. So even the AI story with NVIDIA back in May, a lot of that efforts and what we saw with the stock prices was really boosted by a lot of the cost-cutting efforts and the improvement in margins, which actually bottomed more broadly for the S&P 500, and particularly the tech and growth companies at the end of last year. So how much more of that can keep going? It looks like when you're looking at the BI estimates, and Gina Martin-Adams and her team on the equity side of that thinks it can continue for the next couple of quarters, but next year, when you look on the fundamental basis, it starts to level out.
Do you think the big tech companies really had to, look at costs and monitor costs as carefully as they have been over the past year? Like, this was the first real big effort where they had to really take a close look at those costs.
Well, certainly some companies. I mean, even Zuckerberg. Obviously he wouldn't admit this publicly, but when he talked about year of efficiency, I'm being serious. It was kind of an acknowledgement that that they hadn't been inefficient in the past.
Right.
We've seen this
we
also.
We could do whatever we want.
Yeah, and we've seen this with Salesforce and Mark Benioff. But in their defense, and I don't want to defend them, they could defend themselves, but in their defense, there was this idea that investors, and Jess, you know this well, that for several years, they wanted growth at all costs. They were penalizing companies not on profitability, not on margins. They were penalizing them whether that revenue growth came in light. And you had companies that at some point, even like let's take a ServiceNow, which was growing at like a 40, 50% rate, and then all of a sudden they grow at like a 30-something% rate, and then their shares sell off. And so finally, these executives have finally come around saying, look, this is insanity. We've got to refocus here, and I think you've got a lot of active investors out there that have made that case and put pressure on these companies like Salesforce to say this is what's important to us.
Or you're like a Netflix and you don't actually post the growth, and that's when everyone says, okay, now you got to show me how you're going to stay profitable.
Have you seen this movie? I think it's called Ruin or R-U-N. It's a Bloomberg Originals documentary.
Not yet, but I need to get on that later.
It's happening today.
It's happening today.
It is.
Jess Menton, who leads our cross-asset coverage, she's sticking with us here as we try to parse a slew of earnings crossing the wire right now. Of course, the star of the show is Meta Platforms. We're still waiting.